Good morning, endgame traders. It is November 8th, 8:20, pre-market, 10 minutes before open. This is Bullishbear, just talking pre-market. We're going to get into just a little bit of everything that I use as my trade setup. So let's get into it. Basically, this is all just kind of an overview. If you get anything from this, I hope you take some good notes away from this and maybe implement some of this into your own setups. I have, what you're looking at now is a 32-inch 4K Dell monitor with Tradevate. This is the browser. I also have in another browser, TradingView, and then on a YouTube stream, because I just don't have the setup or the time to use TOS. TOS kind of screwed up on me a few weeks back, so I've been using this YouTube stream. So I have about a 2 to 3 second delay from reading actual live book map, heat map, order book levels and orders across the board. I trade NQ, as you might have noticed already, but ultimately this is my setup. So yeah, we use Tradevate, TradingView online, Bookmap online. So everything's online for me. I do have the Tradevate desktop platform that I use for a personal account, but we're not going to pull that up today. So on my TradingView account, you'll see this top section, which is a 5K tick chart. Tick charts are great for finding very specific levels based on volumes. So as the volume pours in, the candles form faster. On low volume days, the candles will not be forming that fast because it requires ticks to form the candles. As you might have heard, it's already a 5K tick chart, so it's 5,000 ticks per candle. In the bottom right, in the middle here, that's a 1250 tick chart. Just a little more detailed. Basically what you're seeing here is the entirety of the above. And then even finer detail is a 500 tick chart, which would be just this very narrow section. It's even more detail, and you see more information in between all the candles on the 1250. I know Obsidian uses a 1K, so it's 500, 1K, 5K. I like to keep it at the 1250. It puts more data in one candle, kind of simplifies it and smooths out that EMA for me. I have an 80, I believe this is an 65 actually. It's a 65 EMA, the one that changes colors. You can see it's red, and then underneath the price action it's green. So it switches from bearish to bullish as price rises above or below it. And then essentially this 65 is the 5K 20 EMA. So you have your 20 EMA down here, but it's a 65 on the 1250. And then on the 500, I just have a 20 EMA and a, what this is, let's see, 377 EMA. The reason for that is just to get an overall consensus of where price is. It's above or below that. I do have a VWAP for these. And to give you even closer up of a view, here's my 5K tick chart. Nice and close up. I do this on stream a lot so that we can focus in on just that chart, and it will give viewers like yourselves a little more in-depth perspective as to what I am reading and when I'm looking at it. The one thing I don't have set up, and I'll go back to the full view for a second, is on the right over here. Obviously you see the colorful chain on the far right. That's the tick streams for ES on the bottom and NQ up top for the current contracts being traded. And then this lovely spaghetti of alphabet letters. I can't really zoom in. I do not have that set up currently, but if you go into Tradevate under the candles section and you go down to TPO, especially if you're in a prop account, you can choose to elect free extended data, and that will give you this TPO. So the TPO is great for identifying value. We have this set up in the Discord. We have it pinned in our trader chat where you can see the settings that Obsidian and I use to configure this. So TPO, in short, is based on 30-minute sessions. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. Usually stops at O for the day, considering market is open from 8:30 to 3 p.m. Central, or 9:30 to 4 p.m. Eastern. Sorry for anybody in the Pacific, I just don't think that way. But needless to say, you should have a fixed number of sessions from regular trading hours, basically. What we do here is we look for the consolidating ranges and the legs in the market, and we find, point of control, value areas above and below, single prints, which I have highlighted in red from yesterday's trading day, and we navigate basically when to be in, when to be out, what kind of strategies we should be trading during those periods and with zones, and then from there we can navigate and make our decisions as traders. So as you can see, it kind of correlates where even on pretty much any chart you look at, you're going to see 5K tick. Let's take a look at it as it's pulled out a little bit, right? So you'll see on our TPO that these last two sessions, maybe even just the last 3 or 4, basically, you had nice thick value range down here, a little bit of a leg overnight, moving into the next one, which was pretty big consolidation above and below on the sessions. And then we moved into our next day, which was even more consolidated, kind of above the range of the third day prior. And then yesterday's trading range, which was a nice move up in the morning, which I did not get to catch, unfortunately, and it screwed me up. And we'll get into that on other videos, but nice move up, found our range up at the top, consolidated, and that's what you can see on the chart is a zone, a consolidation range. And so we actually draw those ranges based on the most traded areas, and we'll find where a nice trap above or below will be, and we'll find an entry and trade it to the top or the bottom of the ranges. So that's kind of one way we do our strategies in range areas, as opposed to the legs in the market where we're moving and we're rotating up or down to more critical levels. So switching over to NQ on Tradevate, I'll move to an hourly time frame here and show you what we have. I've been breaking this down for months now, years even, and basically since COVID, well over in this section down here. 2021 and 2020 were massive years for the market. It was a huge bull market. 2022, we kind of started to form this downtrend, which is more sideways than anything, but if you put a channel on it, you can see that it is downtrending because our recent highs in July were lower than our highs in 2022, or 21, I'll say. November to the start of the year last year was what I'm talking about. So we had our lows for the year in September of last year, 2022, and then most of 23 has been a huge rally back up to create another touch point of this downtrending channel that is currently our entire market. Now, since July, we've kind of created what I would call big picture, just a bull flag, but this is on a daily chart, so we don't really know what this is going to be. Right now, we're just playing it week by week, day by day. And so we've had plenty of legs in between, and we've currently just recently gotten to a point where, and I'll move this up, it's basically huge legs in the market, and now we are having a few days where we're kind of just, as I showed you on the TPO, consolidating heavily as we get minor moves up. So that's what we look at on Tradevate, TPO, Tradevate charts, and TradingView. And we'll use Bookmap to navigate as we have 5 seconds left to open levels. So I'll let you even watch this as we open. So here we have an open, And we are now going to go into the regular trading hours. So this is the 1250 tick chart. And I have Bookmap next to it so that you can see exactly what's happening on the order book while we trade in real time. I am currently trading an evaluation with Apex. It is a 100K full account through Trade-Evade, and the drawdown is $3,000 and the profit target is 6. So it's a 2-to-1 ratio, and you basically just have to mitigate risks with your trades and pay attention to your drawdown while you're trading it. Currently, my drawdown on this would be about 25. So I'm up 185 on the day, but I was up a little bit more, and I gave some back yesterday. So we're going to work on that today and try and get a little bit more in the account. So looking at basically bigger picture, what we have going on, and I'll zoom in on this, is we're at the top of yesterday's range. So unless we get some catalysts, which Jerome Powell, FOMC chair, did just start speaking at 8:15 this morning, pre-market, we are now getting some sort of volatility, not only from open, but pre-market, where we did get a little bit of a move up. However, we're still at the top of the range. We're actually closer to the middle, in my opinion, but in the channel, we're riding this lower support of the uptrend channel. So, like I said, right here. So as we note this channel that we're in sideways, we're also riding support from a long move up the last few days. Not something you want to try and trade against. It's one of the most important things is do not trade against the trend. Don't time reversals. As you can see right here, trying to short this might not be the wisest decision. I do have a channel for a little bit tighter of a range. And from here, we're basically just going to sit this out for a bit, let price settle down, and pay attention to Bookmap. The larger orders on Bookmap would be above at basically 15,400, which we are very close to. We're at 1395 currently, testing 38 or 98, and then below, which the bidders are pushing up on. CVD is heavy green. So right now, boatloads of market orders to buy. So we're gonna let that settle down. What I'd like to see right now is if we are going to test these highs, is break with volume, since we are at the open and volume is pouring in, and we can potentially do that. But if we fail and we revert back down into the range, if we're looking at the 5K tick, right now would honestly be a perfect time to play that reversion, because it's going right back into our channel. But we don't want to get a fake out, because right now we're above, we're testing above. If we base above, there's no reason to take a short. And just so we can look at all of that on one chart, I will draw a channel. There we go. And that's essentially how we mitigate risk. First steps, chart. Second steps, watch price, pay attention to order book, and from there, you're going to get your signal. If we're going to break above with volume, we need to break 410 and pop. So right now we're doing pretty good. We're at 408. But it does look like we're wicking above. The bears are trying to step in right there. All right, price is starting to move above that. There's our pop. Let's see if that was a snatch and grab, which is essentially a liquidity grab, or if we're ready to make a move above. Oh, I kind of feel like this is more of a trap zone than it is a leg up, because on TradingView, we're actually right at this demand zone right here, or this supply zone, currently supply. You see that one right there. So we're going to pay attention to that, not try to be too reactive. Most important thing is to remain level-headed and not just jump into trades. So if we break below right here, it might be a good short. There it is. Come back down, and there's the wick. So bulls are trying to base above. Best thing we can do is take our profits while we have them. So that actually helps the account a little bit. Brings us up about 60 bucks. It's not bad. Looks like we are getting a little bit more of that follow through back into the channel. We can go ahead and take profits whenever, because we're about to touch this EMA. All right, so now we're looking really nice on the account, 830. Best to leave this one alone for a little bit. Already traded way too early into the morning, 7 minutes into the morning. We're up, but that's more or less an anomaly. Really should be letting the market settle down for the first 15 minutes. So with all that in mind, that is just a short breakdown of what we do in endgame trading. So market open, we've been in a range since yesterday's move. Early morning, we got into this range by 10 a.m. yesterday. Did it all day. Market open today. We tried to break above, trapped bulls. Now we're back in this range. So now we pay attention to that and trade the rest of the day accordingly. I hope this was valuable to you, and good luck. Thank you.